Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, November 7th, 2024. So we saw another good day by the bulls, and what I'm showing you, this is just that the fib extensions to try to just get an idea of where some resistance will be. So the first one that I pointed out last night was going to be right around that 59, 58 level, and once it blew through that, basically at the open, really the next level is going to be this 50, actually is it 59? What is it here? 59.89, and we made it all the way up to 59.85. Then did a little bit of, this is probably the biggest pullback we've had, I think, in close to 2 days on this. So it was pretty crazy, but that came in like the last 15 minutes of trading. So I would not be chasing this right now. I'm not saying to short it. I'm just saying I wouldn't chase it because I think you're going to get a better buying opportunity where it would either be closing this gap at the 59.36, but more likely coming down somewhere into the, sorry about that, right around that 58.70 level and possibly even coming to close this gap. So nothing goes straight up. It's going to run out of steam at some point. But like I said, I'm not really saying this to go short it. You could, and it would work. It could work out fantastic. Just keep it very short term. Have price targets in place, take your profits, and then move on. Don't hold on to this because, like I said, there's a lot of pent up buying right now, and nobody wants to really miss this right now. And as I said, they have really, it's probably one of the most solid reasons the bulls have had, in the past. It was because, the Fed's going to cut rates, this and that, and they never did, which, as I said, that wasn't really a good reason for it, because if the Fed was really going to start cutting rates that much, when our economy the way it was, it would have meant that we're going into a recession. But now the way that everybody's viewing this is that, once Trump becomes president on January 6th, then what happens is he's going to just take away all the regulations for oil. You're going to see gas drop probably by $1. And that alone will have inflation tick back down again to where the Fed wants it. And from there can start lowering rates a little bit. So it's a different reason why I believe that the Fed could cut rates. And really the main thing, they cut a quarter point today. That was pretty much expected. It was really a kind of it was a nothing thing. I think we may have moved 5 points. That was it off of it. But in any case, I think that after the new year, and once we have the new administration in there, and you're going to start seeing inflation come right back down again, and they're going to start cutting rates, and when that's going to happen is you're going to have mortgage rates starting to come down. So it's going to be pretty good for everything on that, and that's why I'm saying this is really the best reason why they've been buying. Now I'm still kind of curious to find out who's going to win the House. I know it right now. They have an 80% chance for the Republicans to maintain, but there's still 12 seats that are not counted yet because they're too close to call. So if Trump is able to get the Republicans in Congress too, that's where I really think you're going to see things really pick up. If it becomes that the Democrats are part of the head of the House, then we can have a stalemate because they can just block everything. So anyway, none of that. So if we head higher tomorrow, keep an eye. Like I said, the 59, say 90, and if it gets above that, then really the next one we're looking at is 6,014. So I personally am on the side that I believe we're going to get some kind of pullback, and these are my reasonings. So here, the 15-minute chart, this divergence just continues to expand right now, and that's after we had the high here. That was on Wednesday, and then we had another one. But notice momentum is shifting down. So seeing some type of pullback would not surprise me. And again, I'm not saying to be jumping on the short side. I'm saying expect a pullback, and then from there we could possibly look for some targets to to buy off of. And we, I could short that's not a problem either. But like I said, you want to keep it very short term. Do some credit spreads. I did a credit spread today. If I would have just left it, it would have been. It would have made money. I was way out of the money on this. It's after the open, so we opened up at the 59.50 area, and I wrote actually the 59.90s and the 6,000. So I was way above that. But what happens was we just kept going up. So when we're up at these levels, that part of the trade would be way underwater, even though we didn't take out the 59.90. So that's where I decided to put, I bought a condor. I built a condor off of it, and then I sold the puts, and just put the regular stop in place. We lost like 400 or 500 because just the way when I got in this, this was way up here when I built the put side of it. So it was a little bit of a hit, but the thing is that if I would have left it, it would have been a nice gain. But I can't risk that with the actual fund. So it took a little bit of hit, nothing really major. Like I said, I think it was like 500 or 600. But I'm sure we'll make that up tomorrow. So if we're going to get a pullback, we have the 50-day moving average at 59.30. 23% retracement is at 59.20. And now if the bears can push through that, that's where I believe we're going to come and test this 75, 59, 42. And I think this would be really a good buying opportunity if we got anywhere into this area, because it's going to give, just release some of the overextensions that we're seeing in momentum. It will give it a time to build back up again. It will then start to form solid support levels, because right now there's really no support levels up here because we just been going straight up. So if the bears can actually push it through this 59.60, there's a good shot we're coming down to the 59.30, and that would be the pullback. Now, again, we may wake up tomorrow and they may be jacking the futures up one more time. That's what I'm saying. I'm not, the short trades is going to be something that we want to just, take quick trades, maybe sell some call premiums or something like that. But you want to stay very quick on these because, like I said, it's a pretty bullish time right now in this market. So, all right, so just let's wrap this up. I do believe we will get a pullback. It may start tomorrow. It may start Monday. And the reason why is this is going to pull our momentum down. So it's going to build something like this where we're going to come down. And then from that, when we come back up again, it's going to, let me do this. Okay. It will make a lower high, and that will be our divergence. So that's why, I'm anticipating that we're going to get some kind of pullback, whether it be just closing this gap at the 59.40 or coming all the way down to the 58.63 or 5900, somewhere in there. And the reason for that, again, is the bearish divergence is on the 15. So if that happens, then we would get this drop, and from there it would be a good buying opportunity for another move to the upside. And then that's where we'll probably get these bearish divergences and maybe get a little bit of a deeper pullback. But from where, I'm not really too sure, because it's like I said, things are pretty. The Bulls are pretty excited right now. So maybe it comes out that the Dems win the House, and that throws a little bit of a monkey wrench into this rally. But I'm not going to try to guess that. I'm just going to say look for spots to buy. If you're going to short, keep it quick and just take profits quickly. So with that, have a great night, and I'll talk to you guys in the